Okay guys, so this is the Bitfinex interface. Bitfinex is actually one of my favorite exchanges. One of the major reasons, it's very, in my opinion, intuitive, gives you all the right information, allows you to see lots of insights, great on historical. They have a pretty good filter as well as to which coins they bring onto the platform. So they used to just have a few coins. They probably have a few dozen now. Actually, it's probably closer to 50 or 60 now. But they don't just accept anyone onto their platform. Which does make, I guess, the job of trying to work out where you should put your money in. If it's a dodgy coin or a scam coin, helps you avoid getting into some of those pitfalls. So why do I like Bitfinex other than that? Look, if you look at the interface, you can see here we've got all of the graphs. We can do lots of things like indicators. We have the order books. We've got also all the trades. So there are a lot of things that are immediately accessible. I'm going to give you an overview of the Bitfinex interface, some of the quick tips. I use this platform not only for my actual human trading that I do, which I, to be honest, do very little of, but also for my full automatic trading. So periodically down the bottom corner here, you'll see a bunch of pop-ups and that sort of stuff coming through. That's my machines or my robots trying to check to see what's going on, see if I've got currency in a particular currency. If I do, then it tries to sell it, all that sort of stuff. So let's get underway. So first of all, we'll start with all the pairs. So we've got here all the major symbols. So we can see here, this is the primary symbol going up against what you're trading up against. So if it's Bitcoin against the US or EOS against the US, other currencies like EOS against BTC instead. So these are all showing here. The 24 hour is basically where it was 24 hours ago. So this is a little bit of a deceptive one because I see a lot of people, they're like, oh, the market's back in the green, all these numbers are showing green. Today you can see it's a fairly mix here between, green and red. But bear in mind, this was from exactly 24 hours ago. So if the market was really down for a few moments or for a temporary point, if you look at the market here right now, it's sort of crashed to a bit of a low again. 24 hours from now, if it's just a little bit higher than this, it's going to be showing as green. Now, is that really a good thing? Because the market could have surged way back up and then come back down to a level here and it'll be still showing green, as long as this point here is 24 hours ago. Now, only a few moments earlier, it would have been showing red because of these higher peaks up here. So do be aware that I wouldn't take this as a absolute market is good or market is bad. Definitely go through these charts. Obviously you need to make sure that you got your 24-hour period set up correct. You can see here I've set my time zone, so do make sure you set your time zone to your local time zone so that you can ensure that you've got the right time showing, so you can align it up with your local system clock. Going on here is the volume. Now, a lot of people will take different ways, and that's why they give you a few different options here. You can see here you've got the option to have it by USD, by volume on Ethereum, by volume on Bitcoin, and also volume self. Now, volume self is a fairly deceptive one because you can see here, according to this, the top traded coin is TRX. You can see down here I've got 31,000 odd TRX. I used to have quite a few million of these coins. I wish I probably held on to them for a bit longer, but the volume self has no meaning by the actual dollar value that's transacted. It's just how much of that own coin it has transacted. Now, TRX is a very popular coin. It is trading in around and in amongst the top 10 coins globally. These guys are about to do what they call a mainnet launch, so they're about to get away from the Ethereum chain where the coin is currently on and move to their own true blockchain network. So this coin has been nicely improving in value, but it's probably really important to note that 31 million of something that is 0.07 of a dollar, so about 7 cents a piece. And if we actually jump this back into the US dollars terms, we can see here that TRX is actually nowhere on the top page at all. In fact, if we scroll down a little bit, we'll get to it here. So yeah, there it is, sitting on the track there at only $2.2 million traded, versus these ones up here. Now, why does the quantity matter? Well, the quantity matters for a few things. If you look at the spreads, the difference between the buy and the sell prices, coins that are traded a lot more frequently tend to have much tighter spreads. Spreads will reduce your risk, because if you buy a coin, let's say you buy it at, say, 10 cents, you might be able to sell it at 9 cents, so you only make a small loss. If it's got a big spread, you could buy that coin at, say, 10 cents, but only be able to sell that coin for 5 cents, and thereby having much larger losses. There is some trading strategies in amongst trading on those spreads. We'll go through into that in a lot future in some of the strategy sessions. But yeah, just know that look, my preferred one is to stay in US dollars. Doesn't really matter where you're from, but a dollar is a dollar. Even keep it in by BTC or Ethereum. But I would have it up against some sort of meaningful value, not just by the volume that it's actually traded. You'll also see a number of these stars here. So I put a star against the currencies that I frequently trade on. So in Bitfinex and all my exchanges, I deal with about 20 to 30 exchanges. I think it's about 26 exchanges, and each exchange I have a number of accounts of in itself. So just Bitfinex itself, I've got a number of accounts, and they reflect basically up against the trading pairs. So this particular account here, this is what I actually trade US dollars up against. And if I go into my favorites here, you'll see that all of these are basically pinned up against the US dollar. So the reason why I do this is for my software programming, and I will go into in the future series about setting up and creating your own trading robots. I'm not talking about using something that you buy from some third-party service. This is all free software that you can put on your PC and create your own crypto trading robot. I'll go through a whole bunch of the steps about how to do it, how to link it up through the APIs, how to have it do everything and trade completely on your behalf. But until we get to that point, just know that I have multiple different accounts. I do try and keep them separate. I do recommend this strategy as well. Each of my exchanges, I try and keep plus or minus around that $10,000 mark. You don't want to have too much more money in any particular exchange or any particular account. Why not in a single exchange? Well, if that exchange gets hacked, or if they have issues, you have the potential of losing your money. There's been a long history of exchanges being hacked, and then on the other hand, we also have the capability for somebody to actually hack your account as well. So not only from a programming cleanliness point of view, but also from an account and security point of view. All of my accounts have two-factor authentication. So for those of you who haven't used it before, a lot of them will use a tool from Google for 2FA. It's freely available on the App Store. Download it onto your mobile phone, sync it up between the service, and basically it means that when you put in your username and password, it's also going to have a token that sits on your phone, or it might send it to your email, or however you set up your 2FA, but it's going to ask you for a secondary source of authentication. And it just adds an extra layer of security, and just about every exchange is going to ask you for it. If your exchange isn't asking you for a 2FA, probably worthwhile skipping that exchange and going on to the next one. A couple of other things about Bitfinex in particular. They did introduce a $10,000 minimum buy or minimum account balance when you're opening an account in Bitfinex, so it is a bit of a pain. You can do what I do, and that is basically just move, I had the 10,000 in one, and then just sort of moved it around to open a couple more accounts. You only need it in there for a short amount of time to open the account, but yeah, look, in the end of the day, $10,000 these days you should be able to get to quite quickly. I actually just start off with a single account, and then just sort of move that money in between, grow it, and when the money grows, I just basically reinvest that money as opposed to putting any new money into the system. So going on, so these are all my favorite coins here. This is the major, I guess, chart. So a couple of things you can see here. I mean, volatility in cryptocurrency is definitely still there. You can see, it's widely ranging between about 7,600 down to, let's call on an average around here about 7,300. So we're talking, plus or minus about 4% variation. Really 1, 2, 2.5 maybe times in the last sort of 2 or 3 days. Now, if you look at typical investments, you go out to the stock exchange or you're going to put your money in the bank, you're looking at about a 3% return per year. We're now talking a 3% return potentially every day. So, obviously you have to be right about it. You have to be able to sell on the right point and then buy in on the right point in order to get that sort of return. And chances are you might be slightly too late, and you might be slightly too late. So those gaps might be slightly smaller, but really that comes into the intelligence that you get out of the platform. I do say, you definitely do need to trade with a little bit of a gut feel, what you think and what you feel, but there is, a very big truth in the market, and that is, when things are going bad, things are going bad. When things are going good, things are generally going good, and that can change at any moment in time. But there is generally, don't join a sinking ship. If you see the market going down, you think it's hit its new low, this can be very deceptive because the market can definitely dip further. Likewise, it could at this point here dip and return straight back up, and this is sort of the classic sort of oversold, undersold type of scenario where we see that great big sort of reversal and then that value going back. And this could effectively have gone either way. This could have obviously gone back down as well. And some of the ways that actually make it easier for you to try and work out what the market is doing. Now, this is if you are trading manually. If you're trading by machine, you're going to be building these algorithms, and I'll teach you how to build a whole bunch of these in my future series as well. But Bitfinex and most exchanges have these indicator lines. That's these lines down the bottom here. Now, one of the things about this graph, if you're colorblind, red-green colorblind, this is going to be of no use to you. You can change the settings of this. Green is good, red is bad. You can change the color tone so that you can tell the difference between these color sets. I've done that on this line down here, so you can see the yellow line and the red line. Now, these indicators are great for helping you to trade. So effectively, you can see here the yellow line and the red line. You can read more into it. This thing's called the true strength indicator. It's one of many. There are two particular that I love, and I'll go through the other one in a moment as well. But effectively, it means this line here says basically when the yellow is above the red, it's a good time to buy. When the yellow basically crosses the red, it's a good time to sell. In theory, when the yellow is going down, it's a good time to sell, and when the line is going up, it's a good time to buy as well. So there's a few different strategies around there. There's a whole bunch of articles online if you look up true strength indicator as to how to properly trade up against it. There's strategies about only trading above the line and only trading below the line, the dotted line here in the middle. There's a whole bunch of different ways you can do it. But this is a really good measure. You can see here if you'd bought in at this level over here, you'd be selling somewhere up over here, you'd be making quite a bit of a difference. Likewise, it's saying somewhere around here to sell, right about here to sell, just before there, and you would probably buy in somewhere about there, which is somewhere between here and here, which is a great little point to buy. So you can see there, it certainly has been able to pick up some of those trends. Once again, there's a nice little gain that you could have gotten there, and that goes on and on. Likewise here, you can see a big drop. You can see, you can see that red line actually went on top, actually up over here. Almost crept back because the market may have been doing something funny there, but it still dropped right back through. And you can see here, we've got a little section of green here. It's starting to get its confidence back, and it's going back through. Now, these indicators are based on mathematical formulas using things like moving averages, simple moving averages, exponential moving averages. There are a whole bunch of ways, and I'll bring up some of the different ones here. So you can click this indicators button here, and you can see all of these. So if you've dealt with the stock exchange before, you'll be used to quite a lot of these sort of ones. One of the other ones I do love is one called No Sure Thing. You'll notice that the two lines are very similar between the two different ones as to when they would recommend to buy and sell. I'm just going to bring this out so you can see a little bit more data. So you can use your sort of mouse scroll bar in and out to add or remove more data on your graph. But you can see once again, that there is some nice, correlations between the data and the graphs, and they will certainly help you try and pinpoint the time to buy and sell. I'll just get rid of this one here so we have more screen room. But yeah, do use these indicators if you are trading by yourself, because in the end of the day, the confidence that you have, as a gut feel, is sometimes can get the better of you, or which can prematurely make you buy or sell before the market has properly corrected itself, and that can cause you to gain some losses. I mean, obviously, I'm not saying you don't do it. I mean, at some point it's got to flip around. Maybe this was the exact right point. The indicator says not yet right yet, but in the end of the day, you can start to see that correcting out, and hopefully, if that continues to rise, these two lines will actually cross. So going down, and you can see the market's gone for quite a bit of a tumble there. So going down, these are the open orders. So you can see at the moment my system has no active orders sitting in the block, so I can close that off. But you can see here the order book. Now the order book is actually really important. I'm going to take our attention first to the right-hand side here, and this is the trade. So once again, if you're red-green colorblind, I do apologize, but anything that is in green is basically when people have bought their coins, and basically anything red is when something has been effectively sold. Now, it's not really straightforward, because obviously you're always buying and you're always selling, but it's as to which side of the lines it comes from. So if you actually sell your coins, you can do it one of two ways. You can say, I'm willing to pay whatever, give me if I want to buy Bitcoin, what is the lowest value that somebody will sell me my Bitcoin for right now, or their Bitcoin to me right now? That's the value that I want to pay. So basically, if you think about it like a reverse pyramid, people want more for their Bitcoin, but somebody is willing to let it go for the least, and that's the order that I want to transact. So if I'm doing that, what I'm doing is I'm actually increasing the value of Bitcoin, because I'm now setting the new market at that target. And if I buy all the coins from that person, I will then move up to the person who has the next bid, etc., etc., etc. And that's how we move up and down the table. Likewise, in the reverse side, people will also want to let go of their coins, and so you basically have the reverse. You can see that basically that pyramid is here. So you can see here, let's start on the green side here. You can see that we've got some coins here. These are basically 7,289 going right down to 7,265. So these are people who are wanting to buy. All right, so people are saying that they want to buy 6.6 Bitcoins at 7,289. But if I go right down here at 7,662, so about $25 odd less, there's a total of 195 Bitcoins to be that people would like at that particular price. Now this is the cumulative price. This is the individual totals for that individual value. So 8.3 at this value, 9.2 at that value, 0.8 at that value, etc. And this is the running total. And that running total is actually really important, because if you think about it, I don't know if you've seen in the news, but the big bust of the Mt. Gox exchange. Now this happened back in 2013. They got a big hack, but they were one of the biggest exchanges in the world at the time. And one of the big problems is when they went into administration, they had millions of Bitcoins. Now they're basically gone into administration. They're now trying to sell and get rid of those coins. And what's happening is people are actually, or they're basically selling these coins. So if you imagine if we got, say, someone came through and said, I'm going to get rid of 200 coins and I'm going to do it right here, right now, we would see the price of Bitcoin instantly go from 289 in this particular exchange right down to 7,264. Now, needless to say, the market is going to do a very big quick correction. There's going to be because the value of the coins in here and the market will backfill and do a whole bunch of other stuff. So it's of no concern really at that smaller volume. But if you start talking about thousands or tens of thousands of coins, you can actually start to make a marked difference. I've certainly been seeing it lately. I think they've been trying to hide it, but sort of every day in our time between about 9 a.m. to about 11 a.m. and 9 p.m. to 11 p.m. I see thousands and thousands and thousands of small little transactions being sold. Far too many to be on the casual books like what we're seeing here, where we sort of have an even mix between buy and sell. So I do think something's going on at the moment, but once again, it's all up to part of the whole crypto thing. Relatively anonymous, very hard for you to tell and come to a definitive answer. But one thing I do want to note about that is, I mentioned about that total. So, one way that you can predict that the market is going to rise or fall pretty quickly is by the total amount. So if we sort of estimate, roughly the same amount of people are going to be buying or selling coins at any one time, the steepness of these, and you can see this is nicely panning out for me right now, so this is perfect. In order to execute all of this, there needs to be a huge amount of coins, 235 to get down to this level here, versus only 179 down here. And if we take the totals here, it's even bigger. It's only 30 to get down to here, whereas it's 113 to get over here. So it means, if these orders were to get executed at the same rate as these orders, we would see the price going down much, much faster, because by the time we get to that, where is it about now, about 100, we are right down here, in price. We're going to see the price fall, if it was around the same sort of buy and sell ratio. Obviously, that means if somebody puts in a big order, that could drastically, basically hit this side or hit this side, but it's going to hit this side less than this side because of the amount that goes through. So it is something I frequently watch, to go through. You'll see some of those trends going through. When you see the value of Bitcoin or any of the coins rapidly rising, you'll see that a very, very narrow sort of skinny one that comes down here, and it generally tapers off pretty quickly because people are wanting to sell it at say 10 or 20% profit, and then you'll see a nice big fat one over here, or vice versa. And these trends are definitely worthwhile watching because they really do reflect quite well as to what's going on in the market over here. Moving on to the next topic, beyond the actual general basic coins, I think I mentioned in an earlier video, what sort of coins to look out for, what to buy, what to sell. Look, in the end of the day, it is a personal choice. If you do go into a nice exchange like this one here in Bitfinex, most of your coins have been pretty well vetted beforehand. I do say be very cautious of big losers and big winners, because big winner at some point is going to fail, or going to go back, and it may be because of things like pump and dumps. If you don't know what they are, look them up. Very dangerous market conditions, but as well, some coins are just, when they're going down, they just keep going down, and some of them just don't really recover very well. I've seen some coins lose 80-90% of values. Particularly when coins first get listed on the exchange, they come on the exchange, they come in at a very high price, people dump their coins because they bought them at the ICO, and you can see that value going down very quickly. And that's probably one other point really to make about all of this over here. When you're looking at the value of Bitcoin, I mentioned in one of my earlier talks, coin market cap, the market capitalization of a coin. Really what we're talking about is what is the value of the coin if all of the coins were basically currently executed at the current market value. So obviously if somebody goes and dumps a whole bunch of coins, and it goes and brings the value down, it's actually going to bring the value down across basically everybody's coin. And that's probably one of the very big misconceptions. People look at the Bitcoin market cap and it's at 150 billion or 200 billion or whatever it is. It certainly does not mean that $200 billion has actually been put into the market. What it means is that basically all the current rate that Bitcoin is trading at, if you multiply that rate out by the total current circulation, you will get the market capitalization of that coin. So if a whole bunch of coins gets dumped, that value crashes down to the ground. You could have only 1,000 coins being dumped, but because it because it brings that value down by let's say $150, you could wipe billions of dollars off that market cap value. So that's why the market caps vary so greatly and so quickly. Once again, there are a lot of strategies around long-term and short-term. Should I hold? Should I trade? I will be going into this a little bit in detail in one of my future talks in regards to the different ways to trade, particularly for tax. There's different ways to trade as a day trader versus those of you who are holding on to coins. Depending on, once again, what country you're from, etc. But there are different laws, there are different legislations, and there are different advantages. There are certain methods that allow you to actually tax write off any losses you potentially make off your income, but obviously it becomes a taxable income. Others work on capital gains. So there are different ways to look at this. I will go into this in the future. Continuing on, so these are the coins that my computer has decided that it would currently have itself in. You can see here it's got a bunch of coins. We've got IOTA, we've got EOS, some SAN, a little bit of cash, and some TRX. Currently, this account's got about 6,200 US or 6,300 US dollars sitting in it. That number obviously moves, according to the dollar amount that goes in and out. So one of the things that I want to sort of really show you guys through is the different ways you can buy. Now, I'm going to start with this one over here first, which is exchange and margin. So some of the exchanges will do basically just straight exchange or trades, and others will do margin trading. Now, I do everything on exchange trading. Now, the big difference between exchange and margin trading is margin trading is really using somebody else's money. Exchange trading is using your money. Now, this is really important if you think about your potential losses and your potential gains. In margin trading, let's say I've got say 1 Bitcoin in cash in my account, or 1 Bitcoin in my account. I can actually leverage that Bitcoin, or it could be US dollars or any other currency. I can actually leverage that. So somebody else has, say, 10 Bitcoin in their account, and they're happy to loan you their amount. What you can do is you can say, well, some sites do, I believe, up to 1 to 100. Most do, sort of 1 to 3, 1 to 5, 1 to 10. But it basically means that you can increase the value you virtually hold by that amount. So if I've got 1 Bitcoin and I'm doing, say, 1 to 10 margin trading, I effectively have 10 Bitcoin that I can actually trade. So this means if the Bitcoin value goes from, say, $10,000 to, say, $11,000, instead of, if I had 1 Bitcoin making $1,000, I've now just made myself 10 times that amount, or $10,000. Conversely, I can lose the same amount of money. So if the price of Bitcoin goes from 10,000 to 9,000, if you think of it this way, I only actually had 10,000 to start with. So I'll have gone from 10,000 down to 0. Particularly important because if the value goes any further, let's say it went to 12,000, you would make 20,000, or you could be at a loss of 10,000. So basically negative 10,000. So that's why a lot of these exchanges, when you sign up to them, they will say your capital is at risk, because if you start margin trading, whilst you do set your stops, would basically say, at this particular point I'm not making money, or at this particular point I want to exit this trade, and you stop that trade. What can happen is, just like we spoke about here before, if you had, say, 50 of these particular coins, and you put a stop, it would actually have to go all the way down to this level down here in order to fully execute. So even though you said that, I'm going to be prepared to lose, my 10,000, or you might say 5,000, it might actually take 6,000 or 7,000, so another 5 or 10% more to actually do that stop. And if the market is crashing really, 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 really fast, you'll see that that value going worse. Quickly here, you can see that big line of green, so lots and lots and lots of people buying. This is what I was speaking about earlier, really, really thin line here as a lot of these orders get executed. It's interesting. It hasn't sort of gained up, but it's probably just because of this bit of a drop here. People are sort of seeing this as a nice little time to get themselves in. But you can see there that orders come through, a lot of orders coming through. We can see that little skinny line across there. as people have executed on a lot of orders. Alrighty, so going back up and going back through to the order form. So the major types of buying and selling. Now I'm going to start on the market. So market, when you're buying coins with fiat currency, so your traditional US dollars, from your credit card or bank, most of these places will do what they call a market exchange. Now a market exchange is buying basically exactly on the value as it currently stands. Now there are advantages and disadvantages to doing it this way. A market sell, you can always say, execute on this trade right here, right now. The great thing about trading in an exchange is you've got generally very low fees, but market buys generally do attract a higher. So in Bitfinex, it's roughly about 0.4%, whereas a limit trade's about 0.2%, so about half the fee if you're doing a limit versus a market. And this is because you're selling basically right here, right now. I'm executing against either that order or I'm executing on that order, depending on whether I'm buying or selling. And you can see here, let's just say, let's just take IOTA. If I go into IOTA, and I want to basically sell everything that I've got, I can hit that red button there. It's going to calculate the maximum amount of IOTA I can sell. If I hit that exchange sell, it's going to sell my entire portfolio of IOTA on the spot price. Now, if I have a look here, if I go into that sell, it's going to basically, if I look on the orders here, I've got 1,000. So I probably would hit the top one. So that's going to be fine. But if I have a lot, if I go say into TRX, TRX can have some pretty big numbers in it as well. So once again, probably no problems. I'll probably be able to sell that for that top buy and sell order. But do be very careful if you're doing large amounts of market, because you do have the risk of running down those orders on the order book. The other thing about a market sell, though, that has its advantages is, if the market is falling, or if the market is gaining and you want to get yourself in, sometimes it can be very hard to execute a limit order, because effectively you have to, if you're buying stock, you have to wait for it to go down to a certain level, or if you're selling, you have to wait for it to go up to a certain level. Sometimes you just want in, and a market buy is exactly that way. If we go to limit, which is the way that most of my trades are done, this is where we start to actually set the price. And you can see here that the price box is now suddenly open. I might just go into, say, let's just go into, say, TRX. I've got a little bit of USD here that I can play around with. So I can have a look here and I can say, all right, so what is the current buy price of TRX and how much can I buy for that? I can buy 265 at that amount. But you know what? I'm not quite happy with that. I want to buy say 200 TRX, but I actually want to wait until the price of that drops to say 0.65. So if the price of TRX actually drops back down into this territory down here, I want in, I want more. So then I can hit that exchange buy, and what that's going to do is that's going to place an order in the book. So you can see down here, we now have an order sitting in the order book. If I actually scroll out, so I can actually click and drag this to give myself some more space, and I can see here, this is where the current market's at, and this is where my buy-in price is over here. So effectively, if this comes and drops all the way down here, this will execute off that order. I will now be the proud owner of 280 more TRX at 6.5 cents a piece. I'm just going to cancel that order off now, and once again we can do the exact reverse. So let's say, for example, I've got 31,000 TRX over here. You know what, I want that. So let's say, for example, it's sitting at 71. I want to take it, so let's say at around about 3% profit. So let's go around about 0.74. I know this is not exact, so for those of you who are math wizards who have already done the exact number in your head, look, it's close enough. And I'm going to sell 1,000 at 0.74, and I can do my exchange sell there. And you can see there, once this number hits up this level here, it's going to go ahead and make that trade. Now, one of the great strategies that you can actually do, and a lot of people do this, including a lot of my software bots, is we say, let's stagger our wins and losses. So we might say, you know, I'm willing to take, you know, 10% at 3% growth. I'll take the next you know, 10% at, you know, 20% growth, or 10%. So as you go up, you might want to get rid of more. So let's say, for example, I will sell another 1,000 at say 0.75, exchange, sell. I might sell now 2,000 at say 76, etc., etc. as I go through. So I can set a whole bunch of different points where I have it up on the graph in order for me to basically actually trade off and sell. And basically, the more money and the higher it goes, the more money I'm going to take, and I'm going to convert that back to, in this case, US dollars, where I can then start my next set of trades. One of the beautiful features as well in Bitfinex is you're able to actually not only cancel individual orders, but you can actually cancel all orders of this particular pair, or I can cancel every single trade that I've got in the system. So very nice little feature that I haven't seen on too many exchanges. Mostly the larger ones will have that particular feature. So that's limit. The other thing that's quite nice is you can hit this little button here, and then you can actually do what they call a hidden order. Now, I think a lot of the exchanges will call this an iceberg order, but basically it's a hidden order in the system. So if I don't actually want somebody to know what I'm buying and selling or requesting, I can actually put in a hidden order. So you can see here a bunch of coins got sold for 0.714, you know, which is down here. So it's probably, but yeah, I almost guarantee you there will be somebody bidding somewhere between 715 and 7176, and those will be iceberg orders sitting either on the left or the right, depending on whether they're buying or selling. And if I put in a value, I will immediately, or I could potentially hit one of those orders almost straight away. Just be aware that you will actually go from having a limit trading fee to a market trading fee. So you'll go from that 0.2% to 0.4% by ticking that box. But it can be very handy, particularly if you've got a large number of coins you're trying to get rid of. You know, you don't want to have sort of that shock feeling on the top of the order book or something like that. You can certainly push it through that way. If you want to go through stealth mode for some reason or another, yeah, definitely go through that way. I do a bunch of my orders through hiddens. You know, it definitely is a way for me to actually fool a lot of particularly other people's trading bots. One of the things I'll go through later on the series is how to write your own trading bots, and one of my strategies is actually writing trading bots to conquer other people's trading bots. Something I have a lot of fun in doing is basically analyzing what's going on in the order books. So when people have orders visible and I can see they're bouncing all over the place, generally you can put it down to some sort of mathematical algorithm. If you work that out, you can actually take advantage of somebody else's software. A lot of fun if you've got the time and the patience to do it. Alrighty, so moving through stop orders. Now, stop orders are very, very important. So stop orders will help you basically minimize your losses in the system. So let's say, for example, right now we're trading at 0.071 cents per TRX. Now, let's say I'm not comfortable. If this drops anywhere below, look, the market hasn't dropped below here, 0.68 in quite a while. If the market drops below 0.68, maybe something bad has happened. So I'm going to set myself a stop point there. So I'm going to say at 0.68, I'm going to, now, in theory, you probably get rid of nearly all of it, but once again, I'm just going to set this amount here, but I'm going to actually say I'm going to sell this stock if it hits 0.68. All right. Now, this is the reverse of what we did before, because we were buying when it was below the line. Now we're selling, and likewise, you do the reverse up the top here when it comes to buying and selling, when it comes to limit versus stops. So this basically means when it gets down here, it's basically going to stop the order, and it's going to basically dump those 2,000 coins. Now it's going to try and do it on the top of the book using the top order on the book. If the top order is smaller than yours, it's going to pick the next one down, and the next one down, and the next one down, etc., etc. So that's where you start to run the risk of, if you dump too much at once, that you can actually cause a cascade effect. And frequently we see this, and one of the big strategies I sort of say to people, and that's particularly on this next, or on the last one on the trading stops, is watch what value you put in, because a lot of people will say, you know what, if it falls anything more than say 1%, 2%, or 3%, dump, and all of a sudden what you see is these very rapid dumps, and these are sort of indicative of what we sort of see here, where it sort of starts to hit a certain value and all of a sudden the value just plummets. And that's because a lot of people have put their stop limits in almost at the same point, or somebody is obviously dumping a big wad of coins at one time. Now, if we do that, or if we do want to put those stops in, I do recommend, just like we did before, put multiple stops at multiple different margins. Obviously be comfortable with it. If you really just want to let it go, just put it all there. Just realize you might not get what you're looking for. So the next one is a stop limit. So we had our stops, we had our limits. The stop limit is both of those combined. So you can say, you know what, once again we're going to pick on a sell, so because we already have this stock, but we're going to say stop at 0.68. So if the market goes down here, I want you to stop. And likewise, I want to take my profits. Let's say if it goes back up to this level up here, so at 0.76. So if I do an exchange sell there, it's going to show me, now unfortunately Bitfinex doesn't show you both the lines, both the buy and the sell, but what it's going to do is, and just let me expand this out, and what it's going to do is it's going to allow us to basically trade that off and get rid of that. So you can also modify your orders here. So we can see here we've got the stop price, the limit price. You can just simply hit that update order there. But yes, it has gone through. Now I will say I have found some bugs in, well, I don't know if they're necessary bugs or not, but I have noticed sometimes that it doesn't respect my my limits more in particular than my stops, but sometimes my stops, sometimes my limits. So to be honest, I tend to use the more of the core stops or the core limits because I find those very, very reliable. Or I use this next one, which I find more useful than this one, which is the trailing stop. Now the trailing stop is a way to actually follow the line. So let's say, for example, right now we think that the market is going to go up, but we also want to protect ourselves in case the market goes down. And I might say, you know what, just looking at the history, you know what, it looks like this guy here, I'd probably want to sell on this, but the rest of it, I'd probably like to take profit. So there's about 2 cents of margin in there. So what I'm going to, or 0.002. So what I'm going to say is I'm going to go 0.002 cents, and I'm going to basically trade that amount there. So we can see now basically we've gone in at 0.002 cents below the current ticker rate. Now if this ticker goes up, this little line will follow it up. The thing is, this line will never go back down. So as this goes up, this will trail it by 2 cents behind it. So if this goes all the way back up to say 0.76, this will move up to 0.74. As the value here, if it suddenly goes even further up, it will continue up. But if it starts to crash back down, this line will maintain hard at that 0.74 mark. And as soon as it crosses that line, it will then go ahead and do that sell. And so that way I can kind of take advantage of the fluctuations by having some allowance. So basically I'm allowing it to move by this variation. But at some point I've got to draw the line and say, you know what, it's going down and it's going to go down further, and I want to stop to stop my losses. Now in theory this would have been a great call to make and set it somewhere over here, because up here this would have sold way up here and I wouldn't be holding on to coins and losing, you know, what is here effectively about another 3% from where it was there. So look, it is a definite way to do it. Not all exchanges have the trailing stop. This is once again one of the reasons why I do love Bitfinex, but many of the exchanges do. So yeah, look out for that in your exchange. I think that's about all the major bits and pieces I wanted to share from an exchange point of view. I've gone through, I guess, you know, all of these, you know, relative indicators. You know, like I said, the other major one that I do like is that no sure thing. So, you know, do go through and check out particularly true strength indicator and no sure thing. You can actually modify the parameters. You'll see a whole bunch of parameters in there. You can actually modify them. So once again, you can go online and, you know, some people have different strategies with different numbers and all that sort of stuff. These are sort of the industry numbers for the standard sort of stock exchange markets. They have been relatively well finely tuned over the decades, so I would sort of say, you know, they are a great starting point if you don't know what these numbers do. I certainly do fine tune these numbers a little bit for, you know, the cryptocurrency markets. But yes, definitely use these indicators. Try not to keep your screen too cluttered. And like I said, if at all possible, use multiple exchanges to spread your risk, and also use multiple accounts within exchange to do all those different trading pairs. I thought I'd just show you another exchange. So I said to you in the very early part of this talk that Bitfinex was my favorite exchange because it has relatively small amount of really good solid coins. I'm going to bring you to one of the exchanges that I frequently use that's all about massive volumes. So I'm going to flick over to one of my next exchanges. Alright, so this is Yobit. So Yobit is actually a Russian exchange, and the easy way to tell that one is you can trade against the Russian ruble, which this particular account does. So I mentioned I only do one type of trading currency pair, so this one here runs against the Russian ruble. You can see here I don't have any Bitcoin, I don't have any USD, because this one's in rubles. Now, before any of you go posting in my comments saying that all these coins are rubbish coins, etc., etc., yes, I know. These coins are not obviously the high value coins. I mean, I've got what, quite a few million of those coins. I've got quite a few millions of those coins, etc., etc. So, in the end of the day, these aren't high value coins, but there are trading strategies to be had in low value coins. So this is particularly done by one of my trading robots. It completely runs autonomously. It does several 100,000 trades every sort of month and a half on these accounts. So it works on very, very high volume, very, very small value trades, but it looks to basically try and do small bits of market capitalization. Now, why would you look at some of these other exchanges? Well, one of the big reasons is the sheer volume of coins. If I go to, because this is the one that's doing Russian rubles, I'll load up the list. You can see here literally thousands of coins that you can choose from. Now, if you have a look at a lot of these, a lot of these lose a lot of value, 26%, 46%, 45%. Some of these will be right up there in the losses. But likewise, you've got other coins here. This one's up 152%. 60%, 96%, 33%. So there we go, 2,287%, and this is in the last 24 hours. So there are a lot of gains to be potentially made here. Obviously, it is about finding the needle in the haystack with these. The other big thing, of course, with coins that aren't traded, you can see here we've got very, very low volumes of trade in these coins. The danger is that you do a transaction that's too large, and you actually dominate it, and you can actually single-handedly crash an entire coin. If I was to go and sell a lot of my holdings in a lot of these coins up the top there, you would find that I would be able to, in many cases, halve, third, or even quarter the value of that coin by executing off that trade. So I won't go into too much difference. I just wanted to show you another exchange just to show you, they're all relatively about the same. Some of the exchanges have these things, dice games and gambling and all that sort of stuff. Honestly, I know you're in cryptocurrency and it is a form of gambling, but this just takes it to a whole nother level. I wouldn't probably recommend it, but hey, it's your money, do what you want. But if you have a look through these, you've got your buy orders, you've got your sell orders. These guys don't give you a nice little pyramid kind of graph like the other ones do. They do bold the major transactions, so you can sort of see where some of those larger values in the order books are. So that definitely does kind of give you a little bit of a hand to see what sort of major. These guys, the concepts of the buying and the selling is more just purely on limit. So you can't see any there sort of any of that the ability to do any of the trailing stops or anything like that. So a lot more of a basic exchange, but because of the pure volume of coins, a very valid exchange. I use Cryptopia, which is New Zealand based. Binance, HitBTC. There are so many exchanges. I use them all. To be honest, as a programmer, the main thing I'm looking for in an exchange is a nice API. Now, I admit Yobit probably doesn't have the best API in the world. There are some key functions that are missing, like cancel all orders, which means you've got to go through all your orders. And there are certain types of orders that they don't actually show you when you query their things. So it's probably not the best, but nonetheless, on the volume of coins, it's certainly right up there. Bitfinex, on the other hand, excellent on the APIs, excellent on its ability to do a lot of things. So probably before I exit, the other thing is I'll show you how to put money in and out. I've done this in another video as well, but in case you haven't been through it, obviously withdrawing, you can pull the money out. If you want to deposit, you basically can deposit funds into these. So let's say, for example, I want to deposit Ripple. Do not understand unless you, yep, okay, I understand. And you basically click to generate an address. Now that becomes your address. You can copy that address, and that becomes where you actually send it to, up here. So that's your deposit address up here, and that's your exchange wallet down here. So be very careful. Obviously, you want to be able to have all the correct pairs. Obviously, I'm going to reset all of this after we're talking here. But this is your deposit address. Effectively, you can't withdraw out of that address anyway. But just bear in mind, that is certainly the way to do it. Is grab that address, plumb it in and into your system, tell it where you want to deposit your funds, and go through. You can also do QR codes. So if you've got a system that basically reads it, you can have a nice little pop-up. It has all the details there as well. So very, very easy to move it in. Just like all crypto payments. I do sort of say, periodically just go through, and I mentioned that I would reset the addresses, and that's exactly how I do it. As I go back through there and basically, kill all those. Now it does say here, obviously, previous addresses are still valid. So if you do have a previous transaction or a previous address, you want to send more money in, by all means. For those of you who want to send me some Ripple, go ahead and plumb in that wallet and give me some Ripple. I'm more than happy for that, but I don't expect any of you to do that. So it's that simple, really, to use an exchange. Withdrawal, obviously, exact same way, except in the reverse. So where do you want to withdraw the money to? Wallet basically just gives you access to all your wallets. So if there are any other questions that you guys want to know about trading on an exchange, I welcome you to drop some comments down in the comments area. Happy to address any of them. Look, in the end of the day, I've been doing this for a little bit of time now. I've made thousands and thousands of % on my original investments. So I'm not saying I know absolutely everything, and there's plenty in this market for me to still learn. But coming in through these interfaces, I can certainly help most of you guys out. Coming up in our future videos in the series, we'll start to be talking about the APIs and hooking into machines. Some of the really exciting things coming out of that really are not only the ability to have machines trade on these trading lines and selling on these lines automatically for you to try and so that you can actually trade 24 hours a day, 7 days a week, while you're sleeping, while you're at work, doing whatever it is. But also we'll be getting, much later in the series, we'll be getting into running all the data into things like TensorFlow, so being able to do artificial intelligence on the data. And this is off data that you're collecting, and data that you can interpret in your own way. Some really exciting results really starting to come out of that. I've been now collecting data for about 4 months, specifically for, actually no, it's about 7 months now, specifically for TensorFlow, artificial intelligent learning, and I can say, the machines are actually able to do quite a lot of intelligent predictions. And I would say you would probably not want to rely entirely off the AI, nor would you entirely want to leverage off these lines, but combine these two together, and I've so far seen very, very powerful results coming out. Going forward, I'll hopefully be publishing some of my results, some of my live set results, so that you guys can see some of these trades, potentially even trying to open up a portal so you guys can see my live progress. So that's all from me for this particular episode. Hope it's been a handy introduction for those of you who haven't traded in an exchange yet. Wishing you all a great day. Keep an eye out for my next video. Thanks very much, guys. Don't forget to subscribe, and we'll see you next time. Hey guys, it's me again. Hope you guys enjoyed that as much as I enjoyed creating that for you. If you can, just hit that subscribe button down there. It will help me know that you guys are enjoying the content, as well as helping me know what is working for you guys or not. Do leave some comments. Happy to hear comments, good, bad, or ugly. If you also would like to hit me up on my LinkedIn channel, do follow me there as well. If you do hit me up on LinkedIn, try and just leave me a bit of a personal message just to say that you found me on this particular channel. It'll help me know where you guys are coming from, and it will help me also direct any comments back through to you. Hope you guys have a wonderful day. Thank you very much. I've spent a lot of time trying to create and put all this together. So once again, would appreciate if you guys do subscribe. Have a wonderful day. Thank you very much.